The US dollar heading for a strong, massive closure for the month of June, right? We are at month end, by the way, guys. So just careful of certain trades. It is month end volatility. It can be volatile. Sometimes it doesn't make sense on a macro or technical level because remember, institutions will be rebalancing their books, so on and so forth. But the way the weekly closed, obviously last week, as I say, we're looking for that continuation. We had this pullback, what we're looking for, right? In this region. Remember, I said it yesterday in this 101 area. Obviously, this is not an absolute given yet because, as I say, this is month end today, so it could get a little bit volatile. But the way things are shaping up, we've seen this pullback that we wanted to see. Things are holding above at the moment. Obviously, key area of liquidity around 101.40.50, which you could look at this almost as a double bottom, right? Equal bottom, equal low, 1-2 neckline here, breaking out of a bullish flag, looking subject to be a higher low that we wanted to see. But just an element of caution, want to see a nice closure, daily closure in the green today. And then obviously this will make way. But otherwise, just be aware that there's potential for it to be a fake out. There's potential. But the way things are looking at the moment is looking encouraging. But even if we were to pull back a little bit more, as I say, in this region that I've got marked up, I'd look for dip buying. Buy. Obviously, there isn't anything major today, but worth keeping an eye on the JOLTS job openings, right? If we get a decent amount of jobs being opened there, is bullish. The US consumer confidence, it's been on a decent run, but I wouldn't be surprised if this is a bad number because we've had higher gas prices. But obviously the big day is tomorrow where we've got Kevin Walsh speaking and we've got manufacturing PMI and prices ahead of obviously NFP, which is the big one, which all shapes up the volatility. And as I say, I'm largely focused on July volatility because at the moment it suggests that we could get 3 hikes September, October, December, or September, November, December, whenever it is. Yeah, September, October, December, we could be getting those hikes from the FOMC. Not to say that they'll hike every month, but you just never know how hawkish Walsh is. But right now, as I say, this is all driving dollar sentiment. US and Iran, Trump sent peace talks, sent envoy out to Tehran for peace talks, or Qatar, excuse me, but Tehran are ruling out peace talks. So it's a bit contradictory. I mean, this isn't moving the markets right now. As I say, what would move the markets is if they start going again and the Strait of Hormuz gets closed, because obviously we've seen oil prices dropping substantially. Guys, by the way, today's the last day, but you can get yourself on a waiting list for when I decide to open it again. But my mentorship, so today's the last day, we're considering for our intake, but that you can join a waiting list for when I may open it again, potentially before the end of the year, but most likely 2027. So if you're interested in that, you can check out a link below or somewhere in this article. And also if you want to get, this is also going to be this, I believe that this offer is going to be ending at some point next month, but where you get access to the KenMacro desk for life for free and also all the educational materials, the macro trading blueprint. So you can check that out as well. That's the final call on that. Most likely be next month. Okay. Catch you in the next update.